All right, what's up, Tycoon? Super excited for today's video. We are going to go over how to find oversold stocks. Do a quick scan, all right, which I think is really easy and can really help you guys out. All you have to do is go to the scan tab on your thinkorswim platform, hit the stock hacker, okay, and we're going to set one up right now, okay? So what you do is you would come in here and you would hit add filter, okay? You go to stock, hit last, all right? This is going to bring up the last price. Okay. So at this point, you're going to choose a range that you like. Okay. Now for this video, we're going to look over how to get cheap stocks. Okay. Cheap oversold stocks. All right. So our minimum for me is going to be around $2. Right. I'm not too interested in penny stocks. All right. And then the maximum is going to be 50. We're going to put a max at 50. Okay. So this means we're going to look up stocks that are trading between $2 and $50. Okay. That's going to be our first filter that we're looking at. All right. Next, what we want to do is go and scan in, and we want to hit category. And what I like to do is I like to look at all New York stock exchange stocks. Okay. All NYSE stocks. All right. We're going to intersect with a category known as all optionable. Okay. Because I'm really interested in getting some cheap leaps on these plays, right? Some cheap option contracts that have a year out or more to possibly ride the momentum from it being oversold so cheap and ride the recovery upwards. Okay. So we're going to click all optionable. So that way all of these stocks we're looking at have options on them and we can trade the options. Okay. You don't have to do that. If you don't trade options, you don't have to. All right. And then we're going to exclude um all OTC stocks, okay? Because we're not looking to get into any of those, right? So those are the first three things I'm going to put on there. Then we have the stock last from 2 to 50, okay? We're going to add another filter in here for stock, all right? And we're going to select volume now. All right. And what I want is I want to see a lot of volume. Okay. Because volume is very critical, especially when dealing with options. Okay. You want to have something liquid enough to be able to get in and out of your option plays at the price that you want. Okay. So we're going to look at 250,000 minimum volume. Okay. And then the next one, we're going to go to add filter again, and we're going to go to study. Okay. So we're going to look at a study now. All right. And we're going to go to popular studies, and we're going to look at the RSI scan. Okay. So from what we're going to do now is we're going to leave it where it's at with the length of 14 and the Wilder's average type. We're going to go to less than, and we're going to change this, okay, to 35. All right. Oversold on the RSI is 30. So we want to be able to look at stuff as it's approaching the oversold territory. Okay. That's what we're looking to do is spot cheap plays and spot them as they're cheap and see what happens after that. Okay. Now this D right here stands for daily time frame. We're going to go to the weekly time frame. Okay. I want a little bit larger of a time frame. So that way we can really see some truly oversold stocks. Okay. So now we'll just go and hit scan. Okay. And you see it brought up 78 stocks right here for us. Okay. So now we have 78 stocks, all right, that are currently oversold. All right. Now this is a lot. So you can trim it down, okay, from 2 to 50. All right. Or again, you can put the RSI at 30 and this will trim it some more. All right. Really, honestly, mostly I keep mine at 30. Okay. So that's what I would recommend. 30 is the oversold level, and it'll really clean it up and minimize for you, right? So now what we're seeing is stocks with a lot of volume that we can get in and out of. All right. And we have a minimum price from $2 to $50. All right. So it's going to be fairly affordable to get into some leap options for these plays and buy some contracts a year out, right? So the next part that I have and I like to do, okay, is I like to go over to this little wheel box right here and hit customize. And I take out everything that's in there. All I really like to see is the symbol, okay, the percentage change. So you just hit percentage change, add items, okay. You see it puts it in there. I like to look at the implied volatility, okay. You know, typically something with an implied volatility over 100 means that, you know, it's very volatile, right? So you could see some quick action on it to the upside or to the downside. Okay. You know, so I like to go ahead and throw the implied volatility on there, the volume, and then the market cap. Okay. So we can see how big these companies are that we're dealing with. Okay. You can sort it by market cap. Okay. You can sort it by volume, whatever has the most volume, or you can sort it by the implied volatility or the biggest percentage change. however you want to do it. You can sort it by symbol. Okay. ANF is one that we'll go ahead and take a look at now. Okay. Because it's on our scanner. We see that it is oversold on the weekly RSI. So this is what I would do, right? Is I would come in, I would go to my charts now, type in ANF, look up ANF on the weekly chart. All right. And look, here it is on the RSI, oversold, right? Now, from here, what you can do is you can look on the weekly time frame and see, what you're looking at really, if it's at a current support level or resistance level where it's at. And my favorite thing to do, okay, is to look for bullish divergence. All right. So let me go over what that is. Okay. So a bullish divergence is when the stock price is just dropping very, very hard. Okay. I've covered ANF here recently and on the daily chart, the bullish divergence. So I'm going to show that to you guys real quick so you can kind of understand and know what to look for on your weekly charts. Okay. So a bullish divergence is when you have a divergence between the stock price action where it has a low and a lower low, right? It's creating lower lows, but the relative strength index, that RSI, is actually in an upward trend. Okay. So while you're creating lower lows on the stock price, the relative strength index is increasing, creating higher lows. All right. These are really good entry points for some swing trades or day trades, right? So you can go and find an oversold stock. And if you see it dropping lower, but the RSI continuing to rise, all right, you want to draw the trend line on that RSI bounce. Okay. So we can see here, we got the first bounce. Okay. That was this day. And it went on a short rally after that. Okay. Up about 6%, 7% in 2 days. That's a nice rally, right? A lot of people are tracing these gains that are much too high, right? Cryptocurrency kind of ruined everything, and people want 1,000% gains. Well, all of these have options on them, option contracts. So a 7% gain in an options contract can net you anywhere from 20 to 100%, just depending whether you're trading weekly, monthlies, leaps, whatever it is, right? So that's some of the signs that I look for. Okay, so again, we'll go down to the weekly chart. Okay, and we'll just go look at it again right here. And this is how you would look at it. You'd say, okay, well, it's really, really oversold, right? Super, super oversold. We'll pull up like kind of like an old drawing set, okay? Just so you guys can see how we would look at it. And we'll come in and look at the recent price action. All right. And we want to chart up and see what are we getting on here. Okay. Are we getting any like bullish divergence between the RSI and the stock price? Well, it looks like we kind of are, right? We see it dip below these oversold levels, okay, and it's come down all the way to 25, but it's starting to creep up, okay. It's still below 30, which is why it pulled up on our watch list. But let's kind of look at the trend lines here on the weekly chart, right? So the weekly chart trend line is going kind of down like this, all right, but the RSI is going up a little bit like this, right? So now we can look on the weekly chart and see, okay, are we going to get a bounce here? All right. And if we do get a bounce, we can ride that momentum, okay, until, we hit our profit goals, whatever that is. Or we can keep this trend line here and wait for it to come back down and bounce off of it again and look at that for your next entry on a swing trade opportunity. Okay. Now, every stock you look at isn't going to have bullish divergence. Some may have bearish divergence, or there may not be a divergence in the chart at all. But this is a great tool. This is something to really help you out when looking for trade opportunities, right? A lot of people just struggle with, finding a good trade. What are high quality setups, right? Well, typically when a stock is oversold below 30 on the RSI, it tends to recover afterwards, right? Now, it's not a quick guarantee that the stock is going to just shoot right up, but it just, that's how the RSI works. That's how the relative strength index works. Okay. Below 30 is typically oversold. And you can start looking at these to see if they have any bullish signs or any key support levels that you are looking at on the chart. If it does, then now it's on your watch list and you can make a decision whether you want to enter or exit that position based on your own risk profile. All right. So, this is a really, really great way to start, just finding some stocks to look for that you want to trade. Okay. Now, what's really, really nice is you can click these three lines right here. Okay. And you can hit save as watch list. All right. Now, I have this watch list saved as cheap leaps. Okay. And now, I can just keep this watch list up here and it'll get updated. Okay. So each day I can come in through here and see what stocks are oversold that are between $2 and $50 and have great volume above 250,000, right? And that are below 30 on the weekly RSI, meaning they're oversold on a large time frame. Okay. So, the whole leaps part of it, right? You can come in here and go to the trade tab for ANF now. Okay. And you can look out to the future, maybe to some contracts 6 months from now, maybe contracts 8 months from now, 10 months from now, or you can look out and try and find the farthest extension of your contracts, right? So we can look over here, and right now, if you wanted to buy the closest out of the money, right, the next to the money option contracts, okay, those are going to be roughly about $500, which that's not bad, right? If you're buying a contract, with 500 days out to expiration, and it's only worth it only costs you $500. That's a really good. That's what I like to call a cheap leap, right? And so what you can do is you can if that's your profile, if that's your strategy, right? You can come in here and purchase these and try to hold on to it and see if ANF carries that momentum into the future and recovers from being oversold and recovers to a more neutral area, right? Because things fall dramatically and then they bounce, right? Just like things rise dramatically and then they take a breath and they drop back down. So this is one way to do it, right? So let's say ANF recovers and it goes to 20 or it goes to 25. Well, those 18 contracts, right, that you got right there, those are going to be in the money, right? And when option contracts are in the money, they gain a lot more and hold their value a lot more, right? Because it's a contract to purchase 100 shares at the strike price. And let's say if it's at 25, right? The strike price is going to be $7 above your strike, right? So meaning that off top, it would automatically already cost $700 just to be able to purchase this contract because it's $7 in the money. All right. And for every 100 contracts, or each contract is for 100 shares. So you multiply that by seven, that's $700, right? Not including the time. Then you have the time value on your contract because it's all the way for 2024. So if sometime in 2022, all right, your contract is deep in the money and you have time, it's going to be worth that $700 plus whatever the time is on it. All right. Now, option contracts are risky because of theta, which is time decay. But looking at leaps, okay, which are typically option contracts with a year or longer expiration date, the theta is very minimized on these, right? Now, you can come in here and buy deep in the money leaps, all right? That is one way to do it. That's, one way a lot of people do it. One thing that I like to do is, particularly for me, is just to look at the volume and the open interest, okay? We're looking at the open interest here, and there's not very many contracts with open interest on ANF. Besides this one here, the 18 strike with 2,000. So that's why I mentioned earlier, volume and liquidity is going to be a big issue, right? If there's only 10 contracts open interest on this, or no contracts open interest, and there's no volume, right? You can see all of these contracts had no volume today. It's going to make it harder for you to get in and out of the contracts that you like. Okay. So, volume, open interest is really important. Theta is important. Delta, implied volatility, things like these are some more things you want to learn when you dive deeper. But for the sake of this video, we were really just going over the scan feature. Okay. And then, to close it off, what you're going to want to do is you can hit save scan query and you can name it whatever you want to name it. Okay. So hopefully you found some value in this video. Hopefully it made some sense, and hopefully you guys can start doing this on your own now and starting to get into some juicy leap option contracts that could give you some really, really nice returns. Okay, so thank you all for watching. I really appreciate it. Don't forget to like, comment, and subscribe. If you want more videos like this, content like this, where I'm giving you guys some tutorials and just showing you how to use the thinkorswim platform, let me know in the comments below, okay? Because I do a lot of search-based content, right? And I've been doing a lot of I mostly just been doing individual stock analysis, right? If people are looking for an individual stock, they'll search that up and hopefully they'll see my analysis on that stock and click on it. But I do also day trade, a swing trade, and multiple other things, right? And so there's many strategies. There's not just one strategy that works. And this is a strategy that you guys can look at yourselves and see if it works for you. Okay.